Hey, Jeff.
Hey, Misha.
Welcome to episode 12 of North Atlanta Real Estate Podcast with Misha Rawal.
And Jeff Ahi.
And today we're going to put the spotlight on whether you should be buying or renting, or as an added twist, should think about investing in real estate or the S&P index fund.
Okay, that sounds like a great idea. And we were talking before the show, and we decided we're going to take a real life example, I think, from Alpharetta.
Yes.
And this is up in your area, actually, in your neck of the woods in Windward. And this is a property that just recently sold this year for $765,000. Is that right? I think you were familiar with the house.
Absolutely.
Right?
And even though the median home price in the Georgia area is about $400,000, in our neck of the woods for a 4-bedroom or a 5-bedroom house on a slab, and sometimes if you're lucky on a basement, the average price would be about $750,000 to about $825,000. So we're going right smack dab in the middle at $765,000.
Okay, great. And then I think this particular person that bought it was an investor, and they put it right on the market and then leased it after 35 days. And did they get, I think it was $3,950, is that correct?
Right under $4,000.
Okay. All right, so we're going to use those numbers. So $765,000 purchase price, rental price, if you were to rent that property, was $3,950. And so what we're also going to look at is, let's pretend you just bought that house and it was just going to be your personal residence. Your interest rate is a little bit lower than the investors, 0.5% lower. So we factored this in at about a 6.5% interest rate. We did some calculations on assumptions on taxes, homeowners insurance, etc. After you bake all of that in, this homeowner's payment would be $4,800. So when you look at that at first blush, that's higher than the $3,950. So first you would say, oh wow, it's better to rent. But then we have to say, hey, well, hold on. In fairness now, let's look at this and say, if you were that homeowner, part of that monthly payment is paying down your loan each month, and then you're also going to get price appreciation. And we used a factor of 4% annual appreciation. It's been a lot higher than that lately, but that is a 30-year average in our area.
Yes.
So does that make sense?
Absolutely.
Right.
So what were the ramifications of buying versus renting?
So once you factor in the appreciation and paying down the mortgage, now that $4,800 dropped down to $2,200 a month effectively. So now when you compare that against the rent of $3,950, that looks a lot better. But then we say, hold on, let's be fair to that tenant. He didn't have to put a down payment of $153,000, 20%, and he also didn't have to have closing costs. So he saved $168,000. Now, if that tenant had just taken that $168,000, put it in the S&P 500 and we're going to use an annual return of 8%, which is a little lower than the last 50 years, but just a little conservative. If he got 8% return on that money, that's going to be about $1,300 a month he's going to get in profit. And so now his rent, instead of being $3,950 out of pocket, it's now going to feel like $2,650. So if we compare that, now we have $2,650 for the tenant, $2,200 for the homeowner. So the homeowner is coming out better, about $450 a month, or $5,400 a year. So that's what happens if you're doing own versus rent. And then just a real quick, if we looked at this investor who bought this home, his annualized rate of return with his rent is about 7.5%. And so that's what he's getting.
Now, let's say I invest the $165,000 in the S&P index fund and I get a return on investment on 9% versus 7.5% as an investor who took that money and invested in real estate. Now we're not looking at the late night phone calls that my tenant is calling me about for a leaky faucet, a replacement of the roof, a tree falling in the backyard, and any vacancy costs which will eat into your gains as investor.
Yeah, so I guess can be some other tax considerations that some investors are doing. You know, you get some benefits if you're self-managing and you're considered a real estate investor full-time. So we don't want to get too much into the weeds. I guess I can talk to a tax accountant if they want to do that. But basically what we're saying here is that you're getting about the same rate of return if you're an investor in this case, or if you're investing in the S&P. And like you said, it can be a little messier if you're having to do all the work to rent it and track and manage these properties.
All right, so let's look at this particular renting versus buying versus investing from a different angle.
Sure.
Short term versus long term. Now, short term, we're looking at it being easier and more convenient for someone who's moved into the Alpharetta area to rent for a little while before they decide to buy, even though it'll be a little more expensive for the first 1 year by about $5,400,
Yeah, that's correct.
right?
Yeah, yeah.
But at least they get a lay of the land. They get to know what the area looks like. They get to test the schools. They get to know where the grocery store is before they invest. Now, if you were to come in and buy something, you probably are going to get it at 2025 prices. We don't know what 2026 looks like.
Yeah.
And you'll be able to lock in, build a community around you for the first for the few years that you're going to be in. And I feel that's what Alpharetta is all about. It's about building community, building, raising a family, making memories for yourself and for your loved ones.
Yeah, right. So there's definitely that rule of thumb that says if you're going to be somewhere for just a very short time, let's say it's 1, 2, 3 years, and you think you're going to get transferred out again, it probably is going to make sense then to rent rather than purchase, because when you factor in the cost of purchasing and the cost of selling, you're talking about 7% there that you aren't probably going to recover in a short term necessarily.
Agreed. Now, from a psychological theory that was proposed by Abraham Maslow, the Maslow's hierarchy of need, I feel like a house is not just about numbers. It fulfills so many different aspects of your life, like the psychological, the fact that you have shelter, safety, belonging to an area, self-esteem, achievement, and self-actualization also. So I feel like you can't put a price tag or like a return on investment on certain psychological factors that a house brings you.
Absolutely. And if you want to paint your bedroom wall orange, you don't have to ask anybody if you own it. And so, that's the other thing. You can personalize your house and your space if you own it, whereas if it's somebody else's, you're not going to do the same thing. And so I think your quality of life is probably higher if you own a home in general.
Absolutely.
Yeah.
And, I feel like in terms of a financial aspect, if you buy a house and if it grows in value, you can always take out a home equity line of credit.
Yeah, absolutely.
You can recast your loan if you think it's too expensive. You can always refinance it. But with renting, chances are that your rent is going to go up every year.
Yeah.
You're at the discretion of the homeowner who can decide to sell the house. And now you're given 60 days, which is the Georgia realtor contract says that you have to give your tenant 60-day notice at the end of the term period, or if you have it built in that you can ask them to leave the property in between the lease term. And then now you're scrambling to buy or rent another place on a short basis.
Yeah, you don't have the same security, I guess, if you're a tenant. One of the other things that we consulted our Chat GPT Oracle, right? And so we looked in there, and one thing I asked it is, what has been, if we look at the studies that say what is the average net worth of an individual towards the end of their life if they've owned a home versus if they just rented their whole life, and the figures it used, a median price net worth of $430,000 if you owned the home and only $10,000 if you were a renter your whole life. And it said about half of that $430,000 was attributed to the owning of the home itself. The rest was from other investments and such. And so, one thing it says is it's a good forced savings and investment plan, and it gives some structure for people. And like you say, you're part of the community, and you probably have a better sense of belonging if you have a home that you own, rather than you're bouncing around renting all the time.
Yes, and buyers are the litmus test of a market. And if we have a market which has more buyers, it means that the market is looking more bullish. And right now, we don't see that happening. And we've been very skeptical about the real estate market. And I feel like people moving into the area are leaning more towards renting versus buying at this point. And investment is something that is, I feel, relegated to the wealthy people.
Yeah, well, it's going to be interesting to see. This reminds me of when we had that downturn in 2008, 9, 10, and 11. I remember especially early on in 2008 and 9, people were going, well, I don't want to buy right now because prices are going to be lower if I wait a few months. Now, I would say right now, I don't have that same sense of certainty that our market is going to be spiraling downward at such a dramatic pace. That we have to keep in mind. That was caused by bad loans in real estate. And so it was caused by the real estate market. Right now, most of the people out there are sitting on a lot of equity in this area. And yes, prices are probably softening, like you say. Demand is a little lower from the buyers, so prices may be softening, or certainly the market is softening. But I don't know that we're going to see a dramatic pullback in prices. I don't know. What are your thoughts?
100%. I think the market is still rallying, and the stock market has been helping.
Yeah. So, it wouldn't surprise me if we pull back a little bit, but I think it's always that tricky question of, should somebody wait to purchase or just purchase now? And I think a lot of it's like you say, if you're coming in from a different area, maybe you want to get your feet wet, see if you like one particular area of town before committing. I don't know. It can make sense, I guess. Right?
Absolutely. Yeah. And that's a question. And if you have any other questions related to real estate, feel free to reach out to me or Jeff, and we'll be happy to answer them.
Yeah, absolutely. Well, goodbye for now.
Yes, goodbye for now.